is 1:30 p.m. here in Lagos, same time in London, and we're bringing you markets, insights, and analysis on Business Incorporated. Here in Lagos, yes, what's coming up on the program? Nigeria's headline inflation jumps to 24.08% in July. South Africa's unemployment rate decreases to 32.6% in the second quarter of 2023. And Kenya reintroduces fuel subsidy amid rising living costs. Hey, and welcome to the program. My name is Will Ibang. Let's begin with market numbers from Africa, where it's trading red in the African markets. NGX down 0.49%, losing that 65,000 level now at 64,892 points. South Africa's GSE is also in the red, down almost 1%, 75,421 points. Now let's look at Egypt, see how they did, up 0.14% at intraday, while Kenya, closed in the red. Yesterday's trading session. Let's move over to the Middle East and see how they performed at intraday. It's mostly red there. We're seeing a 0.37% down for the Abu Dhabi index. Dubai is down also 0.33%. We'll look at the other Qatari index, down 0.32%. Also Saudi down more than 0.5%. Now, there's a growing squeeze in Russian economy. The Central Bank of Russia hiked interest rates to about 12% today, following the drop in the ruble currency yesterday. Joining me from Deutsche Welle is Lars Alter. He's been following this story. Lars, could you tell us what's going on?
Yeah, right. Thanks for having me. So the Russian central bank came together today in an extraordinary meeting and hiked its key interest rate by 350 basis points to 12%. That move came after the Kremlin just yesterday blamed the weak performance of the Russian ruble on loose monetary policy. The Kremlin spoke out yesterday after the ruble had fallen further, even dropping to a new record low when it hit 100 to the dollar, meaning you needed 100 rubles to buy $1 US. That's the weakest for the Russian currency since the war had started. So about the war and the currency, here's the past 1.5 years in a nutshell. Moscow started its war in Ukraine and the ruble tanked, and then it stabilized a bit due to strict capital controls imposed, of course, by the Kremlin. Those controls helped prop up the currency for a while, but as we saw yesterday, it couldn't stop it from falling again.
Will this interest rate hike fix the problem for the Russian economy?
No, it will likely not. Obviously, it will stabilize and strengthen the currency for now, but in the long term, there's probably no way around the fact that the weakness of the currency has much less to do with the country's monetary policy than with its war in Ukraine. Ever since the war started, Russia has been subject to sanctions by the entire Western world, lost its main trading partners, customers for oil and gas. Pretty much, you could say, Russia lost its entire trade. That analysis, by the way, is shared by the Russian Central Bank as well. They said the ruble's weakening is not due to its monetary policy, but to falling export revenues. And analysts in Moscow agree as well. A trader at a large Russian bank told Reuters just yesterday that everyone was ready for the promised inflow of oil revenues, but that they were never recorded.
So what's the general impact of this on the markets, on the economy? What do you have to say?
Well, first of all, the war comes at a huge cost for Russia. According to most estimates, every day of the war in Ukraine costs Moscow between $500 million and $1 billion. Unsurprisingly, the war has been an economic disaster for Russia. Ever since last November, Russia is officially in a recession too, with a loss in the national GDP. And looking forward, there's massive long-term trade issues. Trade with large parts of the world is gone. Russia was a major exporter of oil, gas and coal, and that business is diminished now, although some of it only moved as Russia was also able to forge some new alliances. India is a bigger customer now. China has increased trade with Russia, and earlier this month, President Putin welcomed African leaders to a summit in St. Petersburg. There, however, the mood was not as positive as the Russian leader might have expected. Many African countries, of course, worry about their food supply after Russia has dropped out of the grain deal with Ukraine, and just promising some African countries a giant freebie, replacing their Ukrainian deliveries with Russian deliveries at no cost, only did so much to relieve leaders from the continent. Now, as for the economic situation inside the country, Putin says the sanctions from the West provide Russia with a chance to build up a stronger economy within its borders, invest in made in Russia and so on. But so far, all Moscow has really invested in seems to be the military sector. The rest of the Russian economy is a shadow of its former self, even though, of course, it was never an extremely strong player on a global scale.
Thanks so much, Lars Alter, there with those updates. Lars Alter, Deutsche Welle there from Berlin. Thank you. And now we head to the UK, where latest stats show that the number of companies going bust has declined last month, but they remained higher than before the pandemic, even as investors are weighing the record wage growth. Let's talk to Juliana in London. Hi, Juliana. What's behind the decline?
Well, it's a good question. Not so sure about this data that we've received from an insolvency firm, showing that, you're right, last month there was a slight decline of about 6% compared to this time last year, of companies basically shutting down because they can't afford to trade at the moment. It's still quite high at over 1,700 firms, and it's not just bankruptcies, there are also voluntary insolvencies, and we know that some of the big four accounting firms like PwC have stepped in to try and save a firm before it collapses. Now, of course, the biggest collapse that we've seen in recent times has been Wilko. It's was one of the most popular brands on the British high street, and just like all of the other firms that have been cited in this report, they suffered from a perfect storm of trying to cover from the pandemic, the war in Ukraine, the ongoing cost of living crisis, and high inflation. Now, there have been government measures to try and step in and help beleaguered households, but this has really been helping households, not so much help and support from the Chancellor Jeremy Hunt to businesses. Of course, during the pandemic, there was a significant amount of support, not just furlough, where basically the government paid people to stay at home, but there was lots of loans and grants given to businesses. Some received £50,000. If you were a much bigger firm, you received millions of pounds. Of course, that's all been tossed away now, and so we are seeing that companies are still struggling, and unfortunately, I think these numbers are likely to rise when we get into the colder months and energy bills begin to peak again.
Now, speaking of not going bust, looking at what the numbers from the insolvency data, we're seeing that Marks and Spencer, away from that, as the share price jumped nearly 8% after it said it expects increased profits for the current financial year, and after it's upgrading its outlook. Can you tell us a bit more about that?
Yeah, this is an absolute bright spot, Will, for the high street, who, as I just said, are going through a pretty bruising time. They were going through a bruising time before the pandemic, but things have been made worse. I think one of the white knights of the British high street is Marks and Spencer. Yes, a couple of years ago, it was demoted from the UK Blue Chip Index. It's now on the FTSE 250, which is a much smaller local market, but they are doing very well. And today they surprised investors with an unscheduled trading update, basically letting them know that they can expect much better dividends, because the first half of the year have been very profitable for them. And I think they are citing really their food section. They've got about 1,000 shops across the United Kingdom, about 700 standalone food stores. And as consumers have been struggling with the cost of living crisis, they created a new kind of cost-friendly line, and it's been doing incredibly well. Lots of people have been buying buying M&S food, when really before they were kind of known as a kind of luxury food item. Lots of people, especially workers, are deciding to go to M&S for their lunch. So great update from them. As you said, they're one of the biggest risers on the FTSE 250 today, a 10% increase in their share price, and that's before they've even updated us with the actual numbers, which I believe are due next week.
So while we wait for that, we want to know how markets are reacting today to all these data.
Yeah, I'll have to have a sneaky look at my phone, I'm afraid, Will. That's only where I've got my numbers. But we are seeing triple-digit losses on the FTSE today. I was speaking to Innie this morning about the data we received from the Office for National Statistics, looking at the labour market here in the UK. There have been some concerns, not from staff, because they've been receiving apparently about an average of 8% wage growth. But of course, one of the reasons why we have high inflation is because wages have been growing, which is why the government have been so hesitant about offering union bosses pay rises for their staff. So I think that certainly nerved investors at intraday. The FTSE All-Share is down 1.47%. The FTSE 100 is down 1.61%. And the FTSE 250, despite that peak from Marks & Spencer, it's down at 0.68%. In the currencies market, the British pound is actually trading up against the US dollar by 0.23%. £1 will get you $1.27 at intraday. The British pound is trading down against the euro by 0.03%, but at intraday, the British pound is trading up against the Japanese yen by 0.30%. Well,
thanks so much, Juliana, for that update. Always bringing out the facts behind the figures. And now we move over to Asia, where markets were mixed on Tuesday following key data from both Japan and China. Japan's Nikkei 225 climbed 0.56% to end at 32,238 points after the country saw its second quarter gross domestic product beat expectations. In Australia, the S&P ASX 200 climbed 0.38%. Investors we're digesting the Reserve Bank of Australia's minutes for its August monetary policy meeting, where it unexpectedly held its benchmark rate at 4.1%. Hong Kong's Hang Seng Index extended losses and slid more than 1% in its final hour of trade, while the Shanghai Index was slightly down at 0.07%. China saw a slew of economic data that disappointed expectations on Tuesday, including its industrial output and retail sales. Also, China's central bank unexpectedly cut rates to support the economy. South Korea's markets, however, are closed for a public holiday. Now, futures tied to the S&P 500 were little changed early today in the U.S. Futures linked to the broad market index, that's the S&P 500, was up 0.14%, while the Nasdaq 100 futures was down. Basically, the market was down. The Nasdaq was down 0.61%. S&P 500, as I mentioned, was down 0.59%, and the Dow Jones Industrial Average was down also at 0.63%. Now move over to the markets, the other markets. In the global space, you see oil prices stabilized early on Tuesday as sluggish Chinese economic figures were countered by Beijing unexpectedly cutting key policy rates for the second time in 3 months. Brent crude futures dipped 29 cents to $85.92 a barrel, while U.S. West Texas Intermediate crude slipped 36 cents to $82.15 a barrel. Supply cuts by Saudi Arabia and Russia had helped trigger a rally in prices over the past 7 weeks. China's industrial output and retail sales data on Tuesday showed the economy slowed further last month, intensifying pressure on already faltering growth and promoting authorities to cut key policy rates to shore up activity. Now, gold prices eased early on Tuesday. Spot gold was down 0.2% at $1,905 per ounce, trading near its lowest level in 1.5 months. U.S. gold futures dropped 0.3% to $1,937.80. Gold prices fell as the U.S. dollar and Treasury yields were pushed higher, with investors assessing potential policy actions from Chinese regulators to addressing mounting financial and property risk. U.S. 10-year Treasury yields were near their highest level since November. Spot silver was up 0.1%. platinum fell 0.3% and palladium slid 0.5% to $1,262.70. More updates from the commodities market space right after the break. This is Business Incorporated. Welcome back. Now, last week, gas marketers in Nigeria announced plans to increase prices for cooking gas, adding to the plethora of spikes in commodity costs. Alima Dediron, analyst with financial derivatives company, joins me virtually to unpack this. Hi, Alima. What is responsible for this sudden reversal in the price direction of cooking gas, and what are the implications of this cost for Nigeria and the consumers here?
Okay, thank you for having me. In the past 3 months, we saw a decline in the price of cooking gas due to the fall in the price of LNG globally and the relative stability of the exchange rate. But what we're seeing now is a spike of the price of cooking gas to about 800 to 850 per kg, depending on the location where you are in the country. And we could see that there are various factors that is responsible for this. One is the tax, one is the reduction in vessel, and another thing is the depreciation of the naira. So as a result of this has resulted into an increase in the price of cooking gas, and which means, let's say for instance, that in the past 1 year, the minimum wage is 30,000 naira. And what you could buy with 30,000, let's say you can buy like 150 liters of PMS, for instance, in last year, when fuel was sold at 165 naira per liter. But now, if we discount inflation, which is about 24% in July now, we'll say that you can only buy 50 liters of PMS with that minimum wage, meaning there is more brunt that consumers are likely to bear because of this increase in cooking gas. And this will result into a shift into alternative source of cooking, like charcoal and firewood, which will have environmental impacts, and which will even translate into health issue for consumers. So they have less money to spend and less quantity of commodities to consume as a result of this spike.
You know that, Alima, I'm sure you saw the numbers, the inflation numbers for July coming in at 24.08%. That's a pretty high jump. I don't know what sports there was. It was quite sprinting there. How do you see this impacting the prices? Now, just give me a scenario now. This inflation at 24.08%, how much more pain will Nigerians feel?
Exactly, because we have so many increase in different commodities in the economy, say it food inflation, and we also have hike in the price of transportation due to the hike in fuel price. So consumers are going to feel more pain than this for the next coming quarters, because the prices of things are going to really go up compared to what we have before, because of the different price hike that we're experiencing currently. That's why I cited an example of a minimum wage of 30,000 naira, which would mean that there will be reduction in disposable income in the next quarter or in the coming months. So we are expected to see a surge in the headline inflation.
So, Alima, Nigeria is one of the leading producers of natural gas. We shouldn't be having these issues, but we are anyways. And we've seen that recently the EIU, that's Economic Intelligence Unit, is saying that the prices of projecting the price of global natural gas to drop by about 66%. What will the impact of this drop mean for Nigeria's economy, and especially our forex market?
Oh, well, LNG is just about 11% of our exports presently. So the EIU projection is on one hand, while the evidence that is on ground now is another aspect to it. For instance, now we are in the next 2 to 3 months, we will be seeing winter. and which means they will need more gas to warm for warming, which means a drive in the demand for LNG. So, and as a result of that, it will mean that more exports of LNG for Nigeria. So, and another thing is the El Nino weather in some geopolitical area in the world as a whole. So that too could cause an increase in the demand for LNG. So I'm not really seeing. I'm seeing a contrast to what EIU projected, given those geopolitical tension and weather differences in different regions in the world. And so this could mean an increase in foreign earning for Nigeria, which could help support our Naira in the near term.
Okay, so we're seeing this transition is actually, gas is one of the substitutes to fossil fuels and trying to have cleaner energy. We're seeing gas as one of, those commodities that's been, so we're seeing this transition, and Nigeria doesn't seem to be catching up in terms of alternative energy sources. What would it mean for Nigeria? Other countries were still far behind. How do we catch up? What is the blueprint? What blueprint do you think Nigeria has to make to be able to meet up with this alternative energy source, to be able to manage or mitigate the rising cost in terms of rising energy costs?
So Nigeria is still behind when it comes to development and industrialization. And industrialization needs a huge source of energy in order to be able to work effectively, of which part of it is investing in energy as a whole. But the movement of to clean energy is still a thing of how can I call it now? A thing of slow pace when it comes to Nigeria, because it involves large investments. And for now, Nigeria doesn't have that capacity to really invest in cleaner energy for now. So what we would see in the medium or immediate term is still a slow pace in terms of transition into cleaner energy. But what we need to do as a country is to gradually take a leap into investing in greener energy in the long term, so to speak. But for now, we don't have much when it comes to foreign earnings and reserves in order to really divest or invest in greener energy.
Thank you so much, Alima Adedinron, for sharing those insights on Business Incorporated.
Thanks for having me.
Now move over to Kenya, where the country has reinstated a small subsidy to stabilize retail fuel prices for the next 30 days, according to the country's energy regulator. This is a reversal of the government's policy following public anger over the high cost of living. The Energy and Petroleum Regulatory Authority announced that it will compensate all marketers for petrol, diesel, and kerosene using the Petroleum Development Fund. It adds that without the compensation, a litre of petrol would have increased to over 202 Kenyan shillings from about 194 shillings. Last September, President William Ruto removed fuel and maize flour subsidies put in place by his predecessor. Now, Nigeria's headline inflation rate has jumped to 24.08% in July from 22.79% in June, and that's according to latest reports from the National Bureau of Statistics. Data from the NBS shows food and non-alcoholic beverages contributed significantly to this increase, followed by housing, electricity, fuel, and gas. The food inflation rate rose to 26.9% in July from 25.25% in June, caused by increases in prices of oil and fat, bread and cereals, fish, potatoes, yam, and other tubers. Fruits, meats, vegetables, milk, cheese, and eggs were also in the mix, while core inflation for July stood at 20.47% from 20.27% in the previous month. Now in South Africa's unemployment rate has dropped by 0.3% when compared to the previous quarter, with the latest figure now at 32.6%. According to Statistics South Africa, The number of unemployed people was about 7.92 million in the second quarter from 7.93 million in the first quarter. Data shows that 42.1% of the labor force was jobless in April to June, compared with 42.4% in January to March, while the number of employed people in the country currently stands at 16.3 million. And that's a wrap on Business Incorporated. Do join us tomorrow for another edition. I'm Will Ibong. Thanks for watching.